Hey folks, David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis. Today is Tuesday, February 3, 2015. You're looking at a daily chart of the SPY, and I took one trend line away and I essentially moved it up here. And here's what we've got. So let's look at the bigger picture for a second. We have this trend line that the market drew in for us, and so far, basically, the trend line has been defended, right? So we came down and we tested this trend line here, or we created it here, we tested it here, we came down and we tested it again here, we broke through but we closed above it, and we had a reversal day yesterday. That was this day here, and today we had a follow-through day. Now remember, we had a weekly bottom that should be put in here, or should have been put in here, okay? Then we had a daily bottom Friday, okay, really culminating late last week, remember, and then we had a little bit of a capitulation low on a minor scale yesterday, and then the trend line was defended and we reversed higher. Now look what's happening up here. The market drew in another trend line for us. Okay, and what happened today? We came right into that trend line. Okay, now I didn't have this here last night. I actually didn't notice it until today, but the market's basically been trading in what appears to be somewhat of a triangle pattern. And triangle patterns are interesting. They don't necessarily work out, I would say, a majority of the time, meaning good enough to say the market's definitely going to go this way, or at least 8 or 9 out of 10 times is going to go this way. However, there is a better than 50% chance out of these triangles the market does tend to break in the direction it was previously headed. What does that mean? We have an up move here. Now we go sideways into a triangle, and we could conceivably continue the up move this way from this low up, sideways, and then up again, and that would coincide with my theory that I think we can make new highs above this period, this high here, and we'll see what happens. So what does that mean in terms of where the market goes from here, right? I mean, we had a nice up day yesterday. We had a nice big up day today where the S&P was up almost 1.5%. The Dow was up 1.75%. Your small cap index was up over 1.5%. So, you know, you had a follow through day. Do you get another one? Well, odds are, right, and this is just the probabilities. Probabilities say that we'll probably have some kind of a pause day or maybe even slight retreat day tomorrow. Maybe retrace some of the rally so far, but not necessarily in the cards. Don't know yet. It's hard to tell because a lot of times you will have moves in increments of 3, right? We've seen that before. 1, 2, maybe 3, but that would mean we'd have to jump over this trend line and we probably stall out around these highs here. So around the 206.35, 40 area or 206.25, in that neighborhood, we would stall out. Now that's still basically $1.75 away from, no, I'm sorry. Where did we close today? We closed 204.85. Yeah, so it's about $1.50 higher than we are now. We would probably stall out next. But that's if we had a strong day tomorrow. It's hard to tell what's going to happen. Here's a little wild card for you. Tonight is a full moon. Markets, and many different markets, not just the stock market, but this applies to the gold market, it applies to the oil market, it applies to many different markets, tend to change direction and or accelerate, or I should say, or accelerate in the same direction just following a full moon. Now that's not a hard and fast rule or anything like that. It's just one of those things where it tends to happen more often than not. So what we're looking for is a potential pause day or maybe even slight retreat day following the full moon tonight, following the 2 up days. However, it's not out of the realm of possibility that we get another jump higher and challenge these pivot highs here. This one and this one, okay? Right in this area, 206.25 to 206.50. All right, that's what we'll call it. All right, so we'll just take it one day at a time, and we'll have to see what the market gives us tomorrow. But if we're going to continue making this triangle, the market should start to retreat back down to these lows. However, what I will tell you is the more we bang on this trend line here, the more prone it will be to break lower. So we'll have to see what happens. We'll just see what the next day brings, day by day. Kind of in no man's land right now. I'm not exactly sure. I can't tell for sure what would happen tomorrow. But I will tell you that if we had a strong day tomorrow, then you would look for a pullback on Thursday. But we'll take it one day at a time. All right, let's go over and let's just talk briefly about the U.S. dollar. Okay, I'm going to bring up the chart of the UUP, and when the dollar was at 95. Okay, I told you that the dollar was probably going to go down close to, let's say, 93.25 to 93. Okay, today the dollar hit 93.38. I told you that, I believe, on Friday and probably followed it up yesterday. I might have even told you Thursday and Friday and followed it up yesterday. I'm following it up again today because I remember when I did tell you that, I was thinking that it would have a positive impact on oil, and we'll get to that in a minute. That obviously did happen. So now the dollar hit 93.38 today, and off this high, it's a nice pullback. There could be more downside to be had. It's easy to see the dollar, the UUP, getting into the 24.50 area. And if we really had a sell-off, you might even come into the 23.75 area in this neighborhood. But that's a long way off. I wouldn't look for that just yet. There's a lot of stops along the way. This would be a stop. This would be a stop, especially down around the 50-period moving average. But we'll see. The full moon and could act as a turn day on the dollar as well tomorrow. So we'll have to see how that works out. Speaking of crude oil, let's go over to the USO because now we finally have stuff to talk about with oil. And you had another follow-through day. Now remember, yesterday I was saying that today should mark a daily top for oil on a daily cycle analysis that I do. Now, and I remember saying if oil was up $1.50 or $2, it would start to look like a good short. I think I said it would be a stone cold short. And that kind of turned out to be true, only it did go higher than I anticipated. I said that this area here would be good resistance, and if that broke through, then we would come up into this area, and that's exactly what happened. I did say the top end should be about $20. We came up to about 20.25, and then we pulled back. So if, in fact, today was the daily cycle top in oil, you should see at least a 2 to 4 day pullback in the price of oil. Now, being that oil may have found a bottom for the time being, and this was a nice up move, the pullback may just be pause. It may just be sideways. So don't rule out the fact that we could just go sideways for 2 to 4 days and then continue higher into this area here up above the 20-period moving average. There's a lot of resistance going to be in this area here at about 20, call it 21.25 to 21.5. And if we got through that area, we'll talk. But right now, that's going to be formidable resistance, maybe on the upside 22. But you should see a pullback from here based on the daily cycle top that should have been put in today. And usually markets will spike up into a daily cycle top. So it did make sense today that we had the spike. We had the down move in the dollar. We had the spike in oil. And so it's playing out the way it was prescribed. So let's look at gold, and then we'll give it a wrap for tonight. So the GLD, on the other hand, had a bit of a rough day, and I do think there's lower prices ahead. So what I think right now, gold futures, the April contract is trading at 1257, 1258. I think you're going to see 1245 before this correction is over, and that means that we're going to come through the 200-period moving average on the GLD. I think we're going to come beneath this support area that played out last time. Remember, came right into this pivot top, this low here, and then we pierced it, and then we rocketed up past that. Now we're coming back again. I don't think it's going to hold. I think we fill this gap. So look for 119 to 119 and a quarter and that's going to be the next area of support. And I think if gold holds 1245, I think that should coincide with this level, and then we should see higher prices, and that should all happen this week. And, not to say we'll rocket higher off that number, but that would be a good area to nibble back into the gold market if you're swing trading the gold market, like off this low here. And, obviously, if you're swing trading the gold market and you picked it up in this low, then I'm assuming you either had a break-even stop or you took profits along the way, which you should have. Okay, I think that's good for tonight. Hopefully this is helpful, folks. I'm David Frost, MyStrategicForecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.